Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with Japan. A better than expected gross domestic product for the first 3 months of 2015 helped its stock market to outperform the region on Wednesday. While of course other businesses in the region mirrored the mixed finish on Wall Street overnight. Asia's second largest economy expanded an annualized 2.4% from the previous quarter, beating of course expectations from growth of 1.5%, indicating that Japan may be heading towards a path of steady growth, pulling back slightly from 15-year peak. Also, the benchmark in Japan, Nikkei 225 index, ended up nearly 1% on the back of the upbeat GDP print. Earlier in the afternoon session, the Tokyo bourses charged up to 2278 points, its highest level since the end of June 2000. The yen, however, showed limited reaction to the data showing Japan's economy expanded at its fastest pace in a year. In January-March, with an annualized rate of 2.4%, growth was inflated by inventories as business investment failed to gather momentum. The dollar, of course, hit a 2-month high versus the yen on Wednesday after strong housing data offered signs that the US economy may be recovering from a weak first quarter. The dollar rose as high as 120.98 yen, its strongest level since March 20, before pairing some of the gains to trade at 120.86 yen, up 0.1% on the day. European equities are expected to open lower Wednesday as markets awaited minutes from the US Federal Reserve's last meeting for more clues on the timing of interest rate hike. Greece remains under the spotlight as reforms for aid talks continue, although European officials have said talks are making slow progress. As we're at it, the euro is about 0.1% to 1.1141, staying on the defensive after tumbling on Tuesday as the European Central Bank indicated it would accelerate the pace of money printing to buy government bonds over the next 2 months. As well, also in Europe, sterling nursed its losses from Tuesday when sellers took aid at the currency after Britain's annual consumer price inflation fell below zero for the first time in more than half a century. Also, yesterday, it had skidded to its lowest in over a week against the greenback, reaching a throw of 1.5447. On Wednesday, it had traded about 1.5514 versus the US dollar. And gold in the commodity settled lower on Tuesday, halting a 5-day rally as the dollar extended gains after positive US data, while global shares gained around following the European Central Bank's suggestions it may speed up bond buying. Spot gold fell 1.4% to 1207 an ounce, and it had reached a 3-month high of 1232.20 in a session before. Crude oil prices bounced back on Wednesday for a steep fall in the previous session as strong Japanese economic growth surprised markets. And of course, the consumer outlook in Australia seemed to brighten. Stoking, of course, producer hopes on increased demand. Japan is one of the major importers of crude oil, and growth in the region would definitely be favorable for crude demand. The price rises came after a session on Tuesday that saw oil slide over 3% on a dollar rally, and of course concerns of the building glut. Today's calendar is full with major economic events. Bank of England's interest rate decision coming out 8:30, and of course at 18 the long-awaited Federal Open Market Committee minutes. Today all eyes are on the Fed. Stay tuned, keep an eye on the calendar. See you next time. Bye-bye.